What is the next PD array? The next PD array is in, we are going to tackle the fair value gap. Get, sorry, fair value gap. Sorry, let me just set this in. Let me just set this to dark. Hope you are able to see my material. So let's continue. Yeah, so so we are going to tackle this aspect of the fair value gaps. This fair value gap, these are very powerful key points where price always react frequently. Please pay attention to this. I don't want you to forget this. So what is the fair value gap? A fair value gap is, according to this illustration, a fair value gap is a term used to describe the area of inefficiencies or imbalances of price of an asset in the market. These inefficiencies can be caused by buying and selling aggressiveness. Price usually react from them when revisited. Fair value gaps, also known as displacement and imbalances, just different terms, you get? So when price is in hurry or when there are heavy buying power, price will always leave imbalances or will always leave gaps behind. And how is a fair value gap formed? A fair value gap is formed by three candles. And I'm going to illustrate. This is a first candle. This is the third candle, a second candle, sorry. Then this is a third candle. So candles always have wicks. So whenever the wicks do not meet, like this one, you get this gap here that you see here, you get, that is what we call a fair value gap, and it is neatly demonstrated here. You see this first candle, second candle, and third candle. So this week, when they do not fill this gap that remains, that is what we call a fair value gap. So this is a bullish fair value gap, and this is this one is a bearish fair value gap. So you should put that in mind. You should put that in mind, and I'm going to give you an illustration. To use a better scenario is this. A better scenario. I told you that it is formed by three candles. First candle, second, third. So when the wicks of these candles on the side do not fill this gap, you get? That is what we call fair value gaps. You get this gap. So you mark up the point, the gap where the point where the wick stopped. And I'm going to take you into the charts and we do it practically. Hope you see. Please pay attention with that. Let's continue. Let's continue. Hope you are able to see my screen. So I told you this is the first candle, second candle, third candle. So a fair value gap is the gap between, you see the wicks, where those wicks what? The wick of the first candle, the wick of the first candle where it stops, then the wick of the third candle where it stops. So when the wicks, assuming when this wick was too long up to here and this one also too long up to here, this is not now a fair value gap. You get? The wick has to leave a space which, when you draw with lines, you are not able to what? To you are able to see that there is a realistic gap. Let me use this rectangle. Check very well. Are you seeing I'm drawing from the downer week to that week? You get? So this point of this week and this, you get? So here there is no other fair value gap. You get? There is no other fair value gap. So we use those gaps. So be very keen with that. What? So this is a bullish fair value gap because it is heading up. That's why it is what? So a bearish fair value gap is just a vice versa. Bearish fair value gap is a vice versa. As you see, bearish. So is when price is heading down, but it is all marked the same. The week of the first candle and the third candle. So the same issue when we assume that price wicked up to here and up to here, so this one will not have been a fair value gap, but because price stopped, the wick stopped there and also here, so this is what we call a fair value gap. You get? And what is the logic is that when price was in a hurry to go to its target, you get? So the gap that it left, that is always these fair value gaps are always formed when price is rushing. Price is rushing. And what is the logic behind is when institutions have opened big orders, you guys, big orders. Because when just assume that you are buying something in the market, maybe people are buying with the $1,000, you get $1,000, and then a very big buyer comes in with the $50 dollars. Do you think the price will remain the same? It will quickly hurry up because that buyer will bring displacement in market. There will be a significant move of the market, of price in the market. So you should put that into mind. Other illustration, then we go on chart. I'm going to repeat again. This, you see, this gap that is they are left, those are what we call fair value gap. You see how I marked this, all those rectangles here that you see, those gaps that you see separated by wicks, these ones. I told you should go on your chart and begin what? Some of you did it, some of you ignored, you get? But pay attention, the weak places, you get? Wicks, you get? Those are what we call fair value gap. So once the wicks are meeting each other, like this scenario, once the wick is covering, you see now this scenario here, this is not a fair value gap. Why? Because the wicks are meeting. Get? The wicks are meeting. So you should pay that you should put that into consideration, that once you see those is one. So let's go to chart and I give you an illustration of what fair value gaps are. What fair value gaps are. So just be patient with my network. Just be patient with my network. So let's see. I'm just clearing this off so that I can show you how fair value gaps are. So, so look at my chart. Are you seeing this point? Let me first use the pencil. The pencil. Are you seeing this wick here and this wick here? So this gap here is what we call the FVG. You get? That is what we call the fair value gap. You get? So always put that into consideration. That is in the fair value gap. Let me use this rectangle. You get that? That is a fair value gap. That one is a fair value gap. So price always react in those fair value gaps. So to use a trend line, I can just draw like this. You see this week, that then I'll make it straight. Then I will also come on this. You get? So, yeah. You see that? Those are what? So this gap here, when I put in my rectangle from this week, sorry, let me just clear this. This thing, when I draw there, hope you see that gap there. So that is what we call the fair value gap. And I'm going to show you more and more. Price is always reacting in those fair value gap. That's why we mark them up them. So I'm going to show you an illustration using the premium and discount. Hope you see. My interest was this week. You get? So you see, look at this. You see how price, for example, when I bring my premium and discount from here, from this swing point, this is a swing point, to this sorry, when I bring my what from this swing low, this swing to this, hope you see here this swing point and this one. You see how price moved? Immediately price came to the discount level here. It had to tap back in the premium, then it sold off. You get? So that's how price is moving. I told that this is the premium and this is the discount. So, so when price is retracing back to the premium, it wants to seek these key levels like the fair value gap. Once it taps in that fair value gap, it reacts. You get? So when you go on your chart, so of course, don't first draw this premium and what first exercise yourself drawing fair value gaps. Just draw each and every kind of fair value gap. I told you that even those that have failed and what you just draw, I will teach you how to use them. I understand last time the network it was quite horrible. Yeah. So those are the what? So if it is a bullish fair value gap, sorry, if it is a bullish fair value gap, we call them the BC. The buy side imbalance, sell side inefficiency. And if it is a bearish fair value gap, like now this one are bearish, they are heading down. So this one is what we call the CB. Sell side imbalance, buy side inefficiency. You get? Yeah. Meaning the sell side of price was offered, but it did not give opportunities to the buyers to participate. You get? Yeah. So fair value gaps are very powerful key points. That price, whenever price taps into them, price always reverse. You get? Hope you can see that. Perfect. You get? Price always hunt for those fair value gap. Let me draw for you gaps. This is so you should be very keen. You get? So those are fair value gap. So you just go on chart and begin drawing on what? You begin drawing. Engage your charts with this what? So the more you draw is the more you understand. The more you draw is the more you understand fair value gaps. You get? So these are very powerful key levels. They are very powerful key levels which which you need to put into consideration. Sorry, my what? Just saying. Mm, yeah, there are very many fair value gaps. I can another scenario. Yes, let me now. Those are bearish fair value gaps. Let me just draw now the bullish ones. Please pay attention. Just that my screen is unstable, but you should draw from week to week, not in hope you see this one. I'm supposed to put here, but my what is unstable. I think the workload, let me just give me time to clear this off. Yeah. Let's continue with our, my network is quite not stable. Yeah, let's continue. Hope you are seeing. So these are what we call fair value gaps, just increasing the what? You see? Are you seeing this? This is a fair value gap. You get this one. Let me use a trend line to see. You see that thing. I'm just doing this so that you should be able to spot that gap is a fair value gap. So you don't need to draw this line. You use the rectangle. So this one is supposed to be also here. You get this thing weak. Yeah. You don't need to draw the line and the what. You just draw the rectangle alone. That's for me. I'm just doing this to spot it for you out. These are key levels. They act as support and resistance. So be attentive. So when I told you last time, you will only get to know this by practice, not by reading. So once you finish this lesson, always go on your chart, try them out, draw them out, check your charts. You get? They are all over here. Draw the ones that have failed and those that have not failed. Just your what is exercise your eyes to spot them. You need to first see them before you can know how to use them. It is, you get? These are the fair value gaps. Those weak, those any gap that you see that is unfilled. Of course, later they be filled, but price taps on them and bounces back. Price taps on them and bounces back. I'm drawing as many as I see for you to be able to spot them, understand them, and apply them. So you need to practice all this. Hope you sing very well all this one. There are very many. There are very many. Very many. These ones. You see how price tapped into that one and it immediately reversed. So these are the key levels I use when I'm analyzing. So we are still revealing more and more. Sorry. You see? So price will always tap into these key levels. You get? Even there is another one here. You see? So price always tap into those key levels and reverses. Even no matter how, you see? Please, hope you're seeing all these fair value gaps. Price always react in these key levels. You will just go on your chart. I wanted to repeat this because last time network was very horrible and therefore we did not maximize understanding them. Some of you made errors, you get? So these are the, hope you're seeing everywhere what they are fair value gaps. This one, very huge one, you get? Immediately price tapped into this fair value gap. Let me. So they act as support and resistance. Check now this one. I'm giving a scenario. Price had not yet taken out this high. So what did the price do? Price came. Price was going high. Immediately it made this. It came back and tapped into this fair value gap here. then it reversed, took out that buy side liquidity. I told you that this high, I told that price is always seeking for this swing point. Then after picking that high, it reversed. You get? After it reversed and came here down. After it came here down, after price coming here down, then comes, after picking this, it again comes. You see, after price picking this low, it comes, taps into this fair value gap. Again, it comes, you get? And then it makes a market structure shift. Then again, this fair value gap, it taps on it, it bounces, taps in this fair value gap, bounces. You get? It was nearly tapping into this one. What it did is that it picked this low. So that's why it did not need to tap into this fair value gap. I think it made a FMT. Then it continued. So when price comes again, taps into this, you get, picks this low, then again, that's how price is always. It reacts in this fair value gap. But you need to first understand how to draw them, how to spot them on your charts. How to spot them on your charts before you can be able to learn how to use them. I really wish you can learn them first. Because once you learn this, you can start analyzing. You can start analyzing. All these fair value gaps are very powerful levels that you need to pay attention to. So please go back on your charts, analyze. I wanted to repeat this session because last time network was very horrible. It kept chopping us off, so we were not able to record a very good session that others can learn from. Yes, so you can still follow up, and those who missed will be able to catch up with this session. Yeah. So please, if you have a question, you can just asking. But otherwise, yeah, Leader Noble, I think you will what I told these people, they just need to understand now how to implement the signals in their robot. For me, I will be sharing I'll be sharing the what, the signals. Yeah, so that is the only issue that we need. Then otherwise, those who have attended, I believe. Any question, please, from you people who have who have been on.
Okay, I'll ask one question.